Okay, all right. On that note, let's quickly move on. And Nykaa is the next management on the show. The company reported a stellar set of numbers for the third quarters. Profit jumped by 51%. EBITDA grew by more than 42%. To talk about this, we have Ms. Falguni Nair, founder and CEO of Nykaa, with us. Ms. Nair, thanks so much. It's been a really great quarter and a all-round improvement across parameters in a tough consumer environment where lots of companies are struggling. So you tell us, what are the categories that have led to this outperformance, and do you worry about the so-called urban consumption slowdown?
No, I know. I'm very much aware that overall in the industry, the market has been quite bad and the growth has been quite subdued. But the entire set of consideration has a lot of businesses which are not digital. And I think if you have to look at it in digital businesses, the growth has been good. So I personally feel that at Nykaa, we have delivered both great growth as well as profitability. And I think that is very unique to Nykaa. So I can't say that it was I think it was a quarter which is seasonally strong quarter. I think Nykaa has a lot of its strength play out in that quarter. And we also have been focused on a lot of new customer acquisition over last 2-3 quarters. And I think that is playing out well. And also we are using a lot of AI and ML to drive a lot of personalization. And I think that remains a strength that, the e-commerce platforms have.
Falguni, could you give us a sense of your revenue mix from own brands, third-party brands, and the outlook on margins from here on?
Our business is so big, so it is very difficult to share it in that manner. It's a big business and also a complex business. And as you're aware, we have a lot of repeat customers who are constantly buying from the platform, and their engagement continues to be very strong. We disclose that lifetime, we've now acquired about 40 million customers on our platforms, So I think it's very difficult to break it into that. I think we tend to drive it from our own strategy of wanting to balance both new customer as well as a repeat customer growth. I think about a year ago, what we discovered is that in trying to optimize our marketing costs, we were driving more of repeat customer behavior rather than new customer. And I think we consciously changed that over last 3-4 quarters. And the benefit of that is coming through in terms of much stronger acquisition in our new customer acquisition. However, you can also see that our physical store rollout is also going strong, and that is also giving us further increase in growth momentum. But even in physical retail, like even after 210 stores, physical retail accounts for just about 9% of our omni-channel retail sales. So we continue to be predominantly an e-commerce company.
Well, Falguni, what about the sustainable growth path for the BPC business, both on the revenues as well as margins? What kind of trajectory are you seeing out there?
I think we do believe, and we've said so many times, that beauty consumption, it is a very early stage of growth, and what is happening in the ecosystem is only going to accelerate the growth of beauty consumption in the country. And we, as the largest player with all of the channels, we have, we also have eB2B, which distributes to retailers, which is also growing nicely. We have now faster delivery. So with all of we have stores, we have e-commerce, we have our own brands. So with playing in all of the ecosystem, we do want to come out ahead of the industry growth and continue to maintain our lead. So that should give you your answer. But I think we do believe that e-commerce, beauty overall will grow a lot, and within that e-commerce will grow, and so is retail store environment is growing, and we are rolling out a number of stores.
Ms. Nair, now fashion as a category, it started doing really well for you, no doubt about that. But perhaps it's not growing as fast as expected. What is your strategy going to be on this business?
Well, I think on fashion, we are very happy that we are a platform of choice for the consumer, from premium products, high quality and on trend, and we want to stay that, and that's our moat, and we want to continue to build towards that. I think what we've been doing in fashion is adding a lot of exciting brands on the platform. We shared that over last 2 years, and particularly over last year, we worked very hard to improve the assortment, because I think e-commerce starts with assortment, and people forget that for us, fashion is only a 5-year-old business. And I've been saying for last 2 years that we are continuing to build the assortment, and more and more better quality assortment is coming on the platform. Like, we're really proud of the fact that We just launched Snitch. We also launched Victoria's Secret recently. Before that, we had launched Foot Locker, and many other great brands like Calvin Klein and Tommy and others have been launched. So I think we continue to add to the platform a number of D2C brands, domestic brands, international brands. And I think we are in it for the long haul. I think from a profitability perspective, you can already see that our EBITDA loss is only at around 5.6% negative. And you also can see that the marketing cost is at about 30% of our revenues. And I do feel that marketing is something which is controllable. Yes, we couldn't control it in the last year that it went by. I think there were certain experiments on marketing that we tried which didn't work out, and the growth disappeared, and we needed to revive the growth. But we do believe in the long run we should be able to control the marketing costs as the mix of new and repeat customer it keeps improving on the platform, and that is already happening. Like already the platform is more than 70% customers who are repeat and only 30% are new. And as that ratio improves, our marketing costs do come down. And that's our path to profitability for fashion.
All right. Thank you very much for that explanation. Very useful. Now, a little bit about competition, right? Lots of competition around the BPC segment with Tira and others. Now, with Reliance having tied up with Shein, what's your comment on how a competitive landscape is likely to turn out? And what does it mean for a large player, incumbent player like you?
Yeah, I think on the fashion side, Myntra and Ajio are a couple of competition that we are the strongest competitor from a platform perspective. I think what we keep reminding ourselves and everybody is that fashion is a very large business. It is 5 times the size of the beauty and personal care business in India. And it consists of so many sub-segments. So there is like women's Indian wear, women's Western wear, there is men's wear, there is sportswear, there is accessories, there is kids, home. So I think one functions in all of these categories, and there's enough to offer footwear. So there's enough to offer everywhere. And Shein is at best one brand in one category. So I think from a brand perspective, it may be strong, but I think from a platform perspective, there's enough for platforms to do.
All right, Falguni, thanks a lot for stopping by and giving us all of those details with regard to the past quarter's numbers and how you see things pan out from here as well.